welcome people. The people will be coming in the next couple minutes. We just want to welcome our attendees to our last quarterly webinar for 2025 for the Education Committee for Mortgage Bankers of the Carolinas. If you guys will just give us a few minutes as people join, and make sure to mute yourselves. If you can, in chat, let me know where you're joining from, what company or what city you're joining from in the Carolinas. That would be great. Going forward, we'll use the Q&A button at the top for questions. We're going to just hold tight for probably about 2 or 3 minutes before we start. So feel free to run out and get your waters or whatever. We're looking forward to this presentation. Great. Welcome those who are joining. We're going to wait just 2 or 3 minutes before we start. We have an update in the chat to ask where you're joining us from in the Carolinas. As I said, welcome to our last Education Committee meeting webinar in 2025. We're really looking forward to putting together some new content for you guys next year. So look for that. One of the other things I wanted to let people know is we also look for sponsors for these webinars. If you or your company is interested in a sponsorship, reach out to me, and we can get you some information. Sponsors can come in and we'll have a quick few minutes at the beginning of the presentation to talk about what they do, who they are, and we would love to incorporate that for everybody next year. All right, so we've got Winston-Salem and Charlotte. I'm joining you from Wilmington, North Carolina. So if you're joined, just let me know where you're joining us from in the Carolinas. And just a reminder that once the presentation starts, we are going to use the Q&A button for questions, and we're going to answer them at the end so we don't interrupt our speaker. And then we've got Hilton Head. So we've got some good representation in North Carolina. Is there any South and High Point, another Charlotte, anybody in South Carolina? Hopefully we have some South Carolina people with us. I do know that our speaker is joining us from Charlotte as well. So we'll have some additional representation there. I want to be good stewards of everybody's time. So we're going to get started. This will be recorded and will be sent out to you as an attendee, along with the presentation for your information. So let's get started. I'm very excited to introduce Keith Futrell. So Keith has over 20 years of experience in underwriting, processing, and specialized program support. Currently serves as a DPA program specialist with Down Payment Resources, where he helps expand access to affordable housing through homebuyer assistance programs. Previously, Keith spent a decade underwriting FHA, USDA, conventional, and DPA bond programs. Keith is also known for mentoring colleagues, managing high-volume pipelines, and navigating complex regulatory guidelines with precision. As a speaker, he brings real-world insights, practical strategies, and a passion for helping professionals and borrowers succeed in today's lending landscape. I'm also going to add that I had the pleasure of working with Keith for over 10 years at a previous employer, and Keith was one of our speakers for the Charlotte Regional Mortgage Lenders Association and the Canopy Realtor Association this past fall, where we had over 100 attendees on the program. So welcome, Keith, and we're excited to hear about saving the day with DPA and more about down payment resources.
Thank you, Lisa. I really appreciate it. And I'd like to thank you, Simon, and all of the MBA of Carolina members just for this opportunity to spread a little bit of the word about DPA. We know it's not for every borrower, and it might not be for every banker, but it's definitely a powerful resource to have and something that every lender should have in their playbook right now. So thank you again, and let's get started. So today's presentation is going to be more of a local theme. So we're talking, this presentation is going to be North Carolina and South Carolina programs that we currently track in our portal. And I would just like to say that we're always adding new programs as we find out about them. So that's something where the count is continuing daily. So we're excited. These programs specifically today we're talking about are going to be from municipalities, which are going to be your cities and counties, your nonprofits, and in your employer programs. So for North and South Carolina, we currently have 63 active programs. Second mortgages are 48, grants 9, and then there are 6 deed, BMR, resale restrictions, where there's some kind of caveat when you go to sell the home. 50 of the 63 programs have deferred payments. And what is that? That's 0% interest and no monthly payments for the term of the loan. 43 of those 63, and I just realized that the 9 is actually grants, so they would not have a repayment. So in terms, that would be forgivable. But no repayment is required at all on those loans if all terms are met. So I don't want to throw around the term free money, but in a sense, if the terms are met on a lot of these loans, is indeed money that you do not have to pay back. And for the sake of time, this program count does not include your state and local HFA, Housing Finance Agency programs. That should say community land trust programs and match saving programs, your IDA programs, your individual development accounts, where these programs also make up a big chunk of DPA, but them in themselves could be their own webinar. So for the sake of time, we're just going to kind of keep it on the local level. So this is something that we did, and these numbers are staggering. This is from 2020 HMDA data, and I would say that 3 years later, I don't think the percentages are probably much different, but we did down payment resource an analysis with the Urban Institute. 3.7 billion in declined loans that we analyzed from the 10 largest MSAs revealed that an astonishing 30.7% of those declined loans could potentially have been salvaged with down payment assistance. And that is definitely a staggering number, because we all want to capture the business and never see anything fall through the cracks. Well, this shows you that DPA can be a powerful tool when it comes to those challenges of loans falling through the crack. Analysis of all the loans from the study, approved and declined, showed that 43.6% were potentially DPA eligible. So if you're not already, go ahead and maybe run a lot of your borrowers through DPA, even if you don't think they, quote, need it, because there's a good possibility that they still qualify for it. And it's a great way, as I'll show you later, to leverage their current assets. Benefits of DPA. Well, DPA lowers the DTI ratio, so your debt to income is going to come down, and it helps overcome cash to close insufficiencies, which is a big reason for denials. And that same Urban Institute study, 6% average reduction in LTV from using down payment assistance. So that's a big number, moving that LTV down 6%. This is another big thing that a lot of people may or may not know, but DPAs can be stacked. They can be put together with other DPA programs as the max lien positions are allowed. So from personal experience, I can tell you, I recently attended a closing that we actually provided a grant to Down Payment Resource, and there were 5 liens outside, or there were 5 DPAs outside the first mortgage. So there were 3 liens, second, third, fourth lien, and there were 2 grants. So somebody really did a good job of going out of their way to work for that bar and make that deal work. It was pretty emotional seeing a buyer get in when really they probably wouldn't be able to otherwise. And the work that that loan officer did was outstanding. So keep in mind that these programs can be stacked. Eligible use of these funds, which this is a big thing. We know down payment, we know closing costs, principal reductions, but a lot of them allow for interest rate buy downs. That too will help your buyer get into the loan. It will help pay MI premiums. Sometimes it will help pay repairs. It really depends on the program, but the eligible use of funds, it's getting broader on what these funds can be used for. And then again, like I said earlier, this is really what we need to be doing. DPA funds should be leveraged to keep the applicant's household assets healthy. And we all know when you buy a home, things pop up. Well, it would be nice to have some liquid assets to be able to handle some of these things. And DPA is a way to not deplete your borrower's assets, but you keep them healthy, leveraging them for the future. Here's some more examples of benefits of DPA. The max funding amounts, it's a lot of money. House Charlotte, 80,000 up to on certain programs. City Raleigh's program, 45 on some of their programs. They actually have a targeted area, I think, that goes up to 60. Richland County in South Carolina, 24,500. Spartanburg and I think Greenville County in some 20,000. Incentives for teachers, first responders. City of Fayetteville has a HEROES program. They allow higher income limits. I'll talk more about that. This is cool. City of Rock Hill, up to 57 DTI. I mean, if you can get an FHA approval up to 57, then City of Rock Hill will take that. A lot of programs may have debt to income ratios that you oversee, 32 front end, 45 back end. But I can tell you, I feel like they're loosening it up from what I see, because they know in today's lending environment, you can pretty much have no debt and you're at 40% front end. Your housing ratio is 40%. And then this is another big thing. Along with U.S. citizens, these programs are offered to lawful permanent residents. So again, it touches a broad audience. Doing DPA is more than just margins. I know this is the elephant in the room that you can't make money on DPA. For me, it's kind of what we signed up for, doing the right thing for your bar. This is a big thing for the ones that have to meet CRA goals. DPA will help you meet those Community Reinvestment Act requirements. Refinance business. I would say there's a very high chance a DPA bar will reward your prior efforts if you go to the extent like, well, I don't know, the loan officer did that I attended that closing where they put all those loans together to make that work. When it's time to refi, no doubt in my mind, that person's going to write back to that loan officer. And then referral business. Realtors are going to want to work with lenders that are going above and beyond. And that means working and doing DPA loans. So as you'll see later, we also do a lot of business with realtors. We're partnered with them and they're getting educated on down payment assistance. So you never want to have a realtor maybe feel like they know more than we do. So these are some myths. DPA is only for first-time home buyers. Not so fast. I felt like I was Lee Corso when I was putting this together. 16 of the 63 programs that I was talking about, that we're talking about from slide deck 2, do not have a first-time home buyer requirement. So that's 16 programs in North Carolina and South Carolina that do not have a first-time home buyer requirement. The requirement will probably be you have to sell your current primary prior to closing on your new loan. So it'll have to be a simultaneous closing. And then a lot of people don't know that HUD's definition of a first-time home buyer is not having owned a home in the prior 3 years. So if you haven't owned a home in the prior 3 years, then technically you're not a first-time home buyer. If you've owned one 4, 5, again, HUD does not consider you a first-time home buyer if you haven't owned one in the prior years. There's also exceptions to the 3-year rule for single parent that owned with a former spouse, displaced homemaker, previously owning a property not permanently affixed, probably a mobile home that's on lease land or something, and then owning non-compliant home that would cost more to bring up to compliance than the cost of constructing new. Here's another kind of myth busters. DPA is only for low-income households. Yeah, I mean, a lot of times they are targeting that community, but as you can see here, how Charlotte, one of their offerings up to 110% AMI, that's $123,400 annually for a household of 4. South Carolina has Community Works Carolina, City of Goose Creek. It's an employer assisted program. So it's a way to target employees. It's another avenue for maybe a revenue stream to target business. But they assist, they have a program. The funding amount is depending on income level, but they have a funding amount, I believe, up to $7,500 to 200% AMI. Well, that's 210, 200 for a household of 4. And then if the programs are an 80% AMI or below requirement, well, here's kind of what those numbers are. Greenville County, South Carolina, the program, $116,790 for a 4-person household. City of Raleigh, 80% AMI is $104,200. City of Concord, $89,750. So again, I understand the affordable issue, but if these numbers are continuing to raise every year, which they do a few percentage, then it becomes a little more realistic. And then DPA requires so much additional work. Well, I mean, it's kind of what we do. We collect data, we collect info, we collect information. So how much is additional? Majority of the extra work from what we see, collecting asset and income docs are for household members 18 years of older, because a lot of these programs do have an income limit. That would be no different than like doing a USDA loan. City of Gastonia, their program checklist, they have 4 program disclosures and a copy of utility bills are the only items on the checklist that are different than what you would collect on the first mortgage. Not really a whole lot of extra work. And even though we're not talking about NC Housing or any of the state HFAs, I would just like to say that even their home add 3%. For conventional, there's 4 disclosures. For FHA, there's 5. That's it, outside of what you're going to collect on the first mortgage. So again, how much additional is that work to get that business? And here's some just things that I would like to just say, keep in mind, because I don't want to paint all DPA as such a pretty picture, because there are going to be things that you will have to work through. But again, it's an opportunity and it's another avenue to get that bar approved. So not all program processes and requirements are the same. And what I mean by that is one program provider might make you take your home buyer education up front. One program might say that you can't sign a purchase contract until you get approved for the DPA funds. So there's all kinds of, just make sure you're taking the proper steps where you don't get ahead of the process that's required by the DPA providers. So these things are normally listed and again, are easy to find out. And these are things that we actually track within our portal. Most are going to require a home buyer education or counseling. It's going to be part of it. And I've even seen some of the ones that allow for current owners, or allow that you do not have to be a first-time home buyer. They too want to refresh that home buyer understands the consequences of signing into this loan. Some programs may have a participating lender list or an approved lender list. So they're going to want to make sure maybe that you know what you're doing when you step into their program. And that's not wasting the bar's time and not wasting everybody's time, that you just have a understanding. And they're great working with you. and they're easy normally to get added to these lists. And most of the times they would love to have you as part of their approved or participating lenders. And then real quick, eligible property types will depend on program, but single families, townhomes, condos, modular programs can cover manufactured duplexes. There's some programs that cover 1 to 4 units. So really, depending on the program, it's a wide variety of homes out there. I didn't put it into my slide, and I'm not sure why, but purchase price. There may be purchase price limits. Could be 350, could be 450. Maybe there's none. But again, these are things that you just want to just be cognizant of and make sure that you're knowing going in that it's a fit. And then these programs are going to require owner occupancy. They're not for second home or rental properties. And then the DPA terms, they're all going to vary by program. They could be as little as 5 years. They could be as long as 30 years, or they could just follow the first mortgage term. So really, it's going to vary depending on program. But you take a 5 or 10, or I've been in my home 20 years. You take that time period, that's a little time to ask to maybe get $60,000 forgivable over that time period. And some of these programs, the forgiveness may reduce monthly or yearly. Or they may not reduce at all. So it really all depends on the program. Some programs, for example, a 5-year will reduce 20% per year till it gets to that into the affordability period, the 5 years. And then just for note, grants are forgiven at closing. So you're not going to have any legal docs to sign as far as recording. That's going to be basically when you close. The grant is money's given. And again, I don't want to paint a pretty picture because as far as there's no restrictions, because some of these programs do, how Charlotte, but some of these programs are going to have restrictions to keep the property or the home affordable for the next buyer. Some programs are going to recapture part of the funding to replenish the actual program itself. The example of some of these programs are going to be deed restrictions, resale restrictions, and below market rate programs where they will set the purchase price, or maybe they will give you 75% of the proceeds when you sell it, and they keep 25% again to replenish the program. So you really just want to be aware of what the fine print is when you're going into this, especially when it comes to recapture. And then program providers will use program admins, a lot of time nonprofits, to run the program. And I mentioned that just because a lot of times we'll have people look in our database for House Charlotte and it's under Dream Key. So, I just want to mention that a lot of times these cities and counties, they use the professionals, maybe the nonprofits that are dealing with affordable housing, to kind of set up their program and to run. So that was kind of the extent, and I would just real quick like to tell you a little bit about Down Payment Resource and maybe how we could help your company and just kind of what we do and just to show you who we are as far as behind the scenes. So we were founded in 2008 at coincidentally the height of the financial crisis by Rob Crane. He had a mission to expand access to home ownership and raising awareness still to the day of down payment. It's tough. It's really something that I wish was a little more entrenched in our industry, but that's why I'm thankful for today, because every little bit of awareness helps. We're basically a fintech company. We were just recently named 2025 ICE Innovation Award winner. We're integrated within Encompass. So, for example, when I was underwriting, we were using Encompass. And when you receive some of these DPA programs and you only received them once every 2, 3, 4, 5, 6 months, maybe once a year, it can be tough hunting down the requirements, finding out everything to make sure that you're putting in a clean loan. So really the Encompass integration, it would have been huge for us because we go as far as condition load. We are the nation's leading database and matching search engine for 2,600 homeownership programs. And again, that number's growing. And then our technology basically makes it easier for our business partners to help connect their home buyers with down payment assistance. So we have a lead gen model, which is pretty cool. It's working really well with the realtors and also the lenders. And again, you'll see some of our partners here in a second. And this is kind of how we help from an operations standpoint. So we basically act as your affordable housing department if you're a smaller lender, or if you're maybe a bigger company, then we can strengthen your existing department. So basically our programs, we collect up to 250 data points, and those collections are including but not limited to compliance, origination, underwriting, closing, post-closing, and servicing. So really from start to finish, we do that heavy lifting. As you know, you need to make sure that you're dotting the I's and crossing the T's when you go to sell that loan. Special alert features. We have these so you get notified immediately when these programs exhaust funds, when they maybe suspend, or maybe when a program requirement or procedure changes. These are important every step along the way, whether you're using a DPA or not. Unexpected things you need to know right away. So we provide that. And while there is no rep and warrant, the integrity is assured by, we track these programs inside of 40 days. And when I say dedicated, experienced, and knowledgeable staff, I can't tell you how much everybody in this company cares about just this affordable housing, issue and crisis we have going on. And myself, I actually maintain 386 programs, sadly, none North and South Carolina. That's another story. So, and from a sales perspective, here's what we can do to help. We can take the stress out of lead gen, we can maximize efficiency, and we can increase revenue. So loan officers can position themselves as DPA affordable housing experts, especially with first-time home buyers gaining a major advantage. And here's the thing, you really don't have to be that technical expert, because we're doing all that and providing all that information to you. And then of course you pick these things up by obviously the information we're providing and relaying that to your customer. You learn how to leverage DPA funds. We talked about that earlier, instead of depleting the home buyer's assets. To me, that's huge. It's almost like we become an extension of wealth management. And then, as you'll see as well here in a second, ability to promote your personalized Down Payment Connect landing page on social media with leads delivered right to your inbox. So we do have this lead gen portion where you can promote your whatever it be, your business, your your social media, and people will click on it and it goes right to you and you only. And it's just a way that shows them that you're concerned and concentrated about down payment assistance. And then just to clear up, because a lot of times there is confusion about down payment resource. We're not a lender or bank. We're not a funds provider. We are basically just somebody here to educate, to help, and again, be that extension or arm of your affordable housing. And just here again, if anybody on the call is a part of any of these, and again, you'll see some MLSs, which are really big for us as well. But obviously a lot of the mortgage companies, banks, lenders, credit unions, we really greatly thank you. Any bankers on here, extremely thank you for your business. And anybody that has any interest of maybe becoming a partner with Down Payment Resource, or really just learning more about down payment assistance, please reach out to us. And with that, we'll open up the Q&A.
Great. Keith, thank you. This is great overview. We are all concerned about how we can help housing affordability.
Absolutely.
I want to make sure everybody knows to use the Q&A box for questions. I will take a look and see. I don't think we have anything in here yet. I had a question about working with MLSs, because that's how we got connected with Down Payment Resources through Canopy, which is the Charlotte MLS system. And I think you mentioned this, is you don't want your realtors to know more about DPA programs than you do as
Exactly.
a lender. Are there other MLSs in North or South Carolina that you know of that you partner with? And I know you don't work with North and South Carolina, so I'm not sure if you'll know that answer.
So actually, as of right now, Canopy, and then we have Atlanta's MLS, and then we have again a lot. I can put it back to the partners page, but really that they're really using it well. They're using our resource really well because uh, our down payment assistance like icon indicator that lets you know if maybe a property is eligible. So we're on Zillow, Redfin, and Realtor.com. So really, our branch expands really broad. So again, not only the realtors but also the consumers are becoming very educated on down payment assistance. Just a month ago, we were featured on the Today Show, and it was a random plug. We had no idea we were going to be name dropped. And here's Al Roker standing right next to a screen, and there's downpaymentresource.com, and they were talking about first-time home buyers. So I think it's really something right now that I don't want to say, I don't want DPA to be cool just when things are tough. I want DPA to be something that's part of your playbook, no matter what our industry is like. But we do know that it can be really useful in times like this. And so when you have it being advertised not only on the Today Show, you're going to get consumers engaged, and our realtors are becoming engaged like that. So they're using our lead gen really well. They're learning a lot about the programs. So they're going in with an idea sometimes that, and I hate to say this because we want to educate every lender that we can, but they're going in saying, if you don't offer down payment assistance, then I'm going to find somebody that will. And that's, you never want that because you never want to lose business. And basically I think it is important for at least it to be somewhat of a play, because again, the public's knowing about it more and more, and the realtors are definitely knowing about it. And that's something where when you know about it and you can be that industry expert as a lender, well, they're going to feel very comfortable. And just personally, me, again, it goes back to, if somebody takes the time to do my loan and make it work with down payment assistance, then man, I'm going to go and tell everybody about that person. And word of mouth is powerful, and in both ways. So we don't want the lenders the realtors to be going around saying the lenders don't know their DPA. So that's why I think it's just very important. And as you know, as we worked together in the past, that we would do the state housing finances, we would do the city of Concord, Greensboro, High Point, Winston-Salem. And matter of fact, the DPA closing with the DPAs that I attended was in Winston. And it was 5 DPA stacked. So these are things that really we just need to start just really learning, even if by osmosis, and maybe debunk some of the myths that have kind of been maybe holding it back from really taking off more than it has.
Okay, no, thank you. Yeah, we know, and we were able to see in Charlotte what the MLS looks like, what the agents see, and even when
Incredible.
they share listings, what clients may see. So this is really interesting. I think one of the always challenges with down payment assistance was things like we don't know when guidelines change, and we don't know
Yes.
when they run out of funds, and I
Yep.
don't want to offer something. So I love the fact that this is part of the service that Down Payment Resources does. They will do that for you. So I know
Well, we
Keith said,
know,
yeah,
yeah, we know how important every minute, day is when information is forever changing in our industry. So that's why we do set up these kind of safeguards, and we feel it's important to cycle through every 40. And that's not business days. That's consecutive days. So we're really
okay.
talking less business days. But it really is, like you said, it's important because the requirements change so frequently. If you don't do maybe a loan, but once every 3, 4, 5, 6 months, everything could change. So very, very good point, Lisa, that to really have that awareness and be alerted, have these alerts set up. It's just something that I think is fantastic. And I say this all the time. I'm like, I really wish when we were working back when we were working, because even our simplest partnership model would have been so beneficial, because it would have really just
saved
taken
us
a lot
hours.
Yeah, I mean, you really do. As an underwriter, I mean, you got to make sure that loan is compliant, and you got to make sure that everything is being met. And then another thing we do with Down Payment Resource is that we ensure GSE eligibility. It's something that we started at the beginning of this year, and we've already finished it up. And basically, we're making sure when you go to sell these loans that they're GSE eligible, that that it's not going to be something that's sitting on your books. So we really take into account the full gamut of just everything being, the way it should be.
So I'm gonna just seize I think the Q&A button it said it had a problem. So we can have people raise their hands and unmute if we have a question. I did want to ask, if possible, because we have your contact information, if somebody wanted to see sort of a sample of a, like a lead gen thing, could they email you for what that might look like?
I would love that. And maybe what I could do also, because obviously this is material that we love to have out, because again, it's just bringing awareness to not just, us, but to the, to this affordability issue. But I have I have a flyer that basically talks about, it's the Urban Institute flyer. A lot of lenders love that, because it just hits you in the face. 30.6% decline loans could have been, salvaged. I'll have that flyer. I'll have my Down Payment Connect flyer.
Maybe to us, and we'll send it out with the recap, if that's okay.
And you know what? They can reach out to me. Absolutely. Like I said, I'm here in Charlotte. I care deeply about the Carolinas. And, I'm easily available, both email and by phone. So if you want to reach out by email, I'll reply back. And if you ever need to give me a call, whether it's just confirming something, validating something, maybe you heard something else. I mean, really, we know just again how important it is to have everything I's dotted and T's crossed.
So we did get a question, and thank you, Steve, for putting it in the chat, because I don't know what's happened with the Q&A. Is Down Payment Resources integrated with any other LOSs besides Encompass?
That is a great question, Steve. Thanks for asking that. We are in the process of working with other LOSs, and I would say it will not be too far in the future that we will be incorporated into some others. So the Encompass integration has been fantastic, and the other LOSs, I think it was a matter of really just onboarding Encompass, making sure that it's something that the lenders were going to want and need. And as an underwriter, I knew that was going to be a good hit. And so, yes, Steve, we're hoping in the very near future, and I'm sure that will be announced on Send to Press or wherever. We'll definitely announce that, and I'll make sure that Lisa, that you're getting those.
We can follow you, Down Payment Resources, on social media, right?
Yep, LinkedIn, Facebook.
Okay.
Yep. So if you would like to join our LinkedIn and Facebook pages, that's where we do a lot of our announcements. We have ramped up our social media. So before we were just kind of organically letting this thing take place, but now we're skidding off the runway. So we really gotta make sure that we're taking care of everybody. So yeah, but I am again easily accessible. The info at Down Payment Resource will go to Tracy McIntosh and some of our salespeople, and she's fantastic. She really is the one that I would lean on to really divulge more about our Down Payment Connect, which is the lead gen, the Encompass integration, anything like that. I would lean on them. So
okay. And I don't know whether you'll be able to answer this last question, and then we'll wrap it up. But are you available to any other local North Carolina, South Carolina organizations like the Charlotte one to potentially come in for their members to do a presentation?
I would be actually honored. I've already done, after the Canopy event, the expo, I should say, I did one immediately the day after for a group of realtors, about 40 or 50 of them. Went fantastic. They were super excited. So if you'd like to reach out to me at Keith F at Down Payment Resource, absolutely. I would love to come in and could actually tailor a presentation to your specific area and
Awesome.
maybe talk to your people. I would love that. So
No,
thank you.
that's great. That's
Great question.
great. I don't see any other questions, so I wanted to thank Keith for all this great information. We will be sending out, within the next week or so, the recording, the presentation, and anything else that Keith sends to us. I want to wish everybody very happy holidays and looking forward to look for announcements on what we're going to do first quarter for our webinars for MBAC. We're looking forward to continuing to provide value to you and your group. So thank you, Keith, and have a great holidays and New Year, everybody.
Thank you, Lisa. Thank you, everybody. Happy holidays.
Bye.